Hey guys, what's up, how's it going? Welcome back for another video. In today's video, we're going to be doing a Blossom Social Portfolio Review. So if you guys are brand new to the channel, if you don't know what this is, basically what we do is we use an app called Blossom where we can share our portfolios, and I will basically look at viewers' portfolios, kind of review them, do these quick little reviews and share my thoughts. So it's a cool little way for you guys to, get some cool questions or get some information, and it allows everybody to kind of do like a big learning experience and all of us to kind of learn some new things here. So it's a kind of a cool series that I've been doing on this channel, and I have done a lot of other videos before, so check out the playlist if you guys want to see some previous review videos that I've done in the past. And if you guys want to be a part of the series and you guys want to get your own portfolio reviewed, be sure to check out the app. So there is a link in the description of this video. You guys can download Blossom. It's completely free to do so. Once you guys download the app, head on over to my portfolio, check out the post that I made for June, and be sure to leave a comment on that post for the stock portfolio reviews for June if you guys want your portfolio to be reviewed and featured on this channel. And last but not least, if you guys enjoyed the series and you guys want to follow the channel, be sure to smash the like button and subscribe to my YouTube channel. Alright, let's jump inside the video and let's see at the portfolio that we are reviewing in today's video. So the first portfolio that we're going to be reviewing in our portfolio review series is going to be from Tash. I hope I'm saying that name correctly. I'm just going to call him Tash to make sure we can pronounce that correctly. So Tash says, "Hi Robin, please review my portfolio. I'm interested in generating a monthly dividend portfolio to cover my internet, phone bills, etc. And please note that I do not invest in financials due to some personal reasons." So let's jump inside Tash's portfolio and let's see how his stocks are doing. So the first thing I'm going to do really quickly is look at his portfolio holdings, then we'll cover his portfolio pie, and then we'll talk about things in a little bit further detail. So really quickly here, let's jump and take a peek at the total value of his stocks. We'll start off at the top at his largest holdings and kind of work our way down here. So his number one biggest stock that he holds is Facebook. That's Meta Platforms. 23.5% of his portfolio, almost representing a quarter of his portfolio, is with Facebook stock. The second stock that he has is Bell, that's BCE, representing about 21%. So these two stocks right here represent almost about 50% of his portfolio. Going down here, we have some other ones representing some smaller holdings. So we have Amazon, we have Tesla, kind of around that 10% range, Algonquin Power and Utilities, and then there's some other ones here like Enbridge, RS Real Estate, and E-Commerce Split Corp, Telus Corp, R&W, TransAlta Renewables, and then we have some other mixture stocks here. I'm not going to go through all these ones at the bottom. There seems to be a big mix of dividend stocks as well as some high dividend yield funds, so we're just kind of leave those out there. And there is a lot of small holdings of these different funds, so maybe Tash could share in the comments kind of what he's trying to do. I don't know if these are new stocks he's trying to build new positions in, or if he's just trying to diversify a little bit. Now I will say obviously the holdings percentage of these ones are pretty low, so you might have to clean that up a little bit, but I'm just not too sure exactly what he's doing here. Again, I'm thinking he's trying to build some different positions in some of this higher yield income funds and kind of spread them out, and maybe he's working on adding that passive income over time. But obviously, the biggest holdings here are going to be the top big tech stocks and some of the other Canadian ones up at the top here. Here's a quick overview of his portfolio pie so we can see a visual representative of his portfolio. As we can see, once again, we have Facebook, Bell, as well as Amazon being the bulk of the portfolio, and then we have a good chunk of the other portfolio being in 28%. So those small little holdings that he had actually does make up a big chunk of the portfolio, but nonetheless, a big chunk of this portfolio is held in about 4 or 5 stocks. And I think it'd be really cool to do a quick little overview of the returns of this portfolio, since the all-time returns for Tash's portfolio is actually in I think it was plus 20 overall. You guys can check that out on Blossom if you guys want, which is a cool thing about the platform. But we actually see that he does have a verified account, so we know all this stuff is legit. Now I don't know how big his portfolio is, and it's hard to say when he invested this money, so you guys got to keep that in mind. But I think it was pretty cool to kind of see where a lot of his gains were coming from. So we could take a peek at the top biggest holdings. These are going to represent some of the biggest gains in his portfolio. He actually has a 182% gain from Meta, which is Facebook stock, sorry, it's Meta Platforms. That's a huge gain from Facebook, so he must have bought in at a good time. The other stock he's had pretty significant gains, about 46%, is Amazon. So some of those big tech stocks also performing quite well, and they have performed quite well over the past couple of years. So I would imagine he's been holding these stocks for quite a while. And then if you go down here, we also have some pretty good gains from some of the other stocks as well. But those are the two big ones that really highlighted out to me, really stood out. So if you guys want to see where lots of his gains came from, it actually came from Facebook as well as Amazon. Now I want to dive into some of the stocks inside his portfolio to kind of give you guys a bit of my opinion on some of these stocks and kind of go over the holdings and kind of talk about some of these stocks. He does have a nice little mix here. Now obviously this portfolio does focus on more individual holdings, and the bulk of the portfolio is in some of the big, these big tech companies. So the first one I'm going to talk about is going to be Facebook. So obviously Facebook is pretty popular. Now this stock has actually done quite well. Now obviously over the past couple years, a lot of these tech companies have just performed extremely well, and anybody who's invested in them, as long as you invest at the right time and you hold them over a long period of time, you probably did pretty well. But Facebook has actually been in an interesting position since September 17th of 2021. It's actually been down quite a bit, although we did see a big jump up here. Now obviously if anybody who's been buying kind of around this range might be probably doing really well, but the big thing is like anybody who bought like over the past couple years, even in 2020, obviously might be doing really well with the portfolio. Now the year-to-date return of Facebook is up 117%. So if you bought at any point in time earlier this year, obviously you've done really well. The 1-year return is going to be 38%, as well as the 5-year return about 43%. So this is a pretty big company. They're pretty solid. If you look at any of the big US funds, they're probably going to have stocks like Facebook. But again, a lot of people are kind of indifferent about these stocks because they don't know what's going to happen. Is it going to jump up? Is it going to go back down? Obviously, a lot of them have done really well, and that's the big question a lot of people are asking. Same with companies like Amazon, kind of same thing. If you bought the company at any point in time over the past 10 years, you're going to be looking at really well. The year-to-date return of Amazon is 47%. So a lot of these tech stocks are really pushing up the market. If you look at like the S&P 500, like VFE, which I own, I'm a big fan of, a lot of these stocks are kind of pushing it up, and this is where a lot of the big gains are coming from. The 1-year return from Amazon is about 3%, 5-year return about 50%, and like I said, the year-to-date return is about 47%. So still doing really good this year. The next one is a bit of a different, deviating a little bit here. We got Bell Canada, which is a big holding in his portfolio as well. And this is obviously not a tech stock, it's a telecommunications company. So it's nice to see some diversification. I'm going to give my thoughts on the overall theme of the portfolio, as well as some things on diversification that I think could definitely be more included inside this portfolio. But I do like to see a little bit of diversification. A lot of people like their different telecommunications companies. Bell is going to be one with a very high yield. It's got this 6.32% yield. Traditionally, it's been a pretty good stock, has performed quite well. Year to date, it's up 1.64%. The 1-year return is down -11. 5-year return is 11%. Keep in mind, this isn't including dividends. So with dividends, it's probably looking a lot nicer. But obviously, it's had a bit of a rough year, and, it is more of a dividend stock. So we're not going to see a lot of growth from a company like Bell, but that was one of the ones I wanted to talk about. Then the final one is going to be another tech stock. Once again, these big tech companies like Tesla, that's obviously been, pretty crazy depending on when you invest into it. Year to date, Tesla is up 104%. So just like Amazon and Facebook, it's had a really good run this year. 1-year return is -7, but 5-year return is 944%. Absolutely ridiculous. But if you bought the stock, you're obviously doing well. So I just want to point that out, that this portfolio is very much focused on these individual tech stocks, and that's where a lot of the gains have been coming from. Alright, so a few things that come into mind that I want to talk about the portfolio really quickly before we end today's video. So obviously his portfolio is very much focused on individual stocks, and if you guys watch these portfolio reviews, we've seen quite a variety of different portfolios. We've seen some that are focused on ETFs that hold multiple different holdings, and we've seen a couple portfolios that focus more on individual holdings. And this portfolio is very much focused on individual companies. If you remember, like the Facebooks, the Amazon, there's also like AQN and some other stocks there. So one thing I want to point out really quickly is that there isn't very much diversification inside this portfolio, and that's perfectly fine if you're willing to accept what those big holdings do. So if the big holdings like the Facebook and all that kind of stuff, if they do really well, obviously your portfolio is going to benefit very much, and this portfolio has benefited from that. So I think that's kind of what the objective here is, to invest in some of those big tech companies and really hope that they do really well. The downside though is potentially if these companies that you're heavily invested into, like 20+ % inside your portfolio, if they don't do very well, then your portfolio is going to lag behind because you have such a big holding. So it's kind of one of those things that people just need to kind of figure out for themselves. But once again, I would like to see a little bit more diversification, and I think that's what the attempt with some of the passive income funds and the dividend funds is what Tash is trying to do here. He's built a portfolio that's done really well with some individual companies, and now he's trying to maybe diversify a little bit, maybe take some of that growth-based oriented part of his portfolio and focus a little bit on dividends. He did mention he did want some more dividend income just to pay for some bills and stuff like that, and probably a good way to do it is to invest like some small holdings, a small percentage of the portfolio in some of these dividend stocks. And if he is making that transition from a growth-based portfolio to add a little bit of income, my only suggestion would be to take it slow and kind of do things one at a time. I did notice he does have a lot of other holdings, a lot of small holdings, so maybe that's something you might want to clean up a little bit. You might want to decide which ones you want to keep, what ones you want to get rid of. There's nothing really wrong with having a lot of holdings, and when it comes to some of the passive income funds, I do know that diversification does matter a lot, but you just kind of maybe start with a few and kind of work and grow it over time, but just kind of keep that in mind. If you do have a lot of small holdings, it can be a little bit harder to manage. But overall, in conclusion, I do like the portfolio. I do think the underlying stocks and the big ones he holds are pretty good quality. The only thing I would suggest is maybe trimming them down a little bit and trying to find that sweet spot, what's right for you. And if you do want that passive income, you know, the funds and some dividend stocks are definitely a great way to start. And if you want to just pay some simple bills, you don't need to have a lot of money invested into some of these funds or even just a regular dividend stock to get that income going. Of course, it really matters on how big your portfolio is. And since I can't see how much the total value of your portfolio, is hard to really say there, but if you want to bring up the passive income, I think you're doing it in a good way. Just once again, try to maybe trim back some of those holdings, and once again, take it slow. There's no rush. You might decide at some point in time you want to kind of switch things around a little bit. So if you start off slow and you do small holdings and you're working on things over time, if you want to adjust things as you go, it makes it a lot easier to do. Alright guys, that's it for today's Blossom portfolio review. What I'm going to be doing in the next video is I'll grab another person's portfolio and we'll do a deep dive inside their portfolio as well. Like usual guys, let me know what you guys think in the comment section, and let me know what you guys think of Tash's portfolio. Tash, if you are watching this video, feel free to leave any comments, or if there's anything I missed, or if you want to expand on everything I covered here. Thanks for leaving a comment, everybody. Thanks for everybody who takes part in these videos. They're really fun to do, and I hope you guys get a lot of value, and I like learning from them just as much as you guys are. Take care, have yourself a good day, and I'll see you guys later.